Hello traders, this is ForensicForex with Deontay, where we analyze the details and specifics of the foreign exchange market. This video is going to speak on what new traders should be focused on to be more efficient in learning and sharpening their Forex skills. Before we get into today's lesson, let's get into our disclaimer. Do your own research. My content is intended to be used for informational purposes only. Please do your own research before making any investment or trade based on the information provided and consider your own personal circumstances. You can talk to a professional or do your own independent due diligence on verifying any information that you find on my channel. This is a message from myself, Deontay, as I am not a professional. With that being said, let's get into today's lesson. What should you be focused on as a new trader? I broke it down into 3 categories. Track daily price action, keep focus on 2 to 3 pairs, and block out the noise. Even if you are not a new trader, following these steps will help build a good foundation. For those that are new to trading, keep calm and take things one day at a time. There is no quick way to learn Forex. However, we can study efficiently and methodically each day, each week, or each month. Tracking price action. As a new trader, focus on these several things when it comes to price action. The daily range. It is important to know the life cycle of the daily candle. The daily range will expose you to what occurs when a new candle is born and deceased. In simple terms, when the candle starts and finishes is very important. Trading sessions. There is a rhythm to the market that is time sensitive. There are certain points of the day when the market is injected with volume, which causes the markets to accelerate. The same can be said inversely. There are certain parts of the day when the market reduces its volume, which causes the markets to decelerate or stall. Equal highs and lows, old highs and old lows. Highs and lows have buy and sell orders above and below them. Those orders are simply liquidity that the Forex algorithmic code is programmed to reach for. Think of this as a magnet pulling price up or down. These highs and lows create phenomenal triggers to the market. Marking off these areas will help prep you for your entries and exits. Areas of speed. Speed will be your best friend when it comes to the markets. Marking off areas of quick dynamic price action will help you prep for your entries and exits as well. Now, on the left, we're going to take a chart and look at an example of some of the things that we're talking about here. When it comes to the daily range, we know that it is important to understand where the candle opens and closes, and when the highs and lows form for the daily range. Now, when we look at a daily candle, now let's take this candle for instance here, right, on June 10th, 2022, we can see this daily candle is born here, right here. This is where it opens. So that's the open of this candle. And then at one point of time, it drops below the open right here. Right? Then it creates what? The low of the day as well. So we know that this price point here is the low, because we can see that this is a bullish candle. It closed green and up. Price then creates this low at a certain point of time. Then it gets above the open again. Then it rallies higher, higher, higher. And then it creates what? The high of the day. So the highest point price has been for that trading session, that trading day. So then we get the high printed out for us. Right? That's the highest point that that candle has been. We'll zoom in a little closer. And then at a certain point as well, the candle then creates the close, which is here. Meaning this is where the candle is deceased or it has finished trading for the day. So you got your open, your low, your high, and then close. Let's take a further look into this. So we're going to mark this off on the hourly. So this day is June 10th. Look at June 10th, 2022 in its daily trading range, which is a Friday. You can see that the candle starts here. So it's born here. It drops below, creates the low of the day here, rallies, creates the high here, and then closes here to end its life cycle. This is important to study each and every day. As we know with hindsight, this is a what? Bullish day. This is an up close candle. So we can study this. we go back down to the 15-minute time frame, and we're going to see if there is a strategic and methodical way these markets are moving. And there is, absolutely, and you can study it each and every day as a new trader. The low of the day is forming within a trading session that we know as the London close session. That starts from 1 a.m. to 5 a.m. And I'm not going to get real detail with it, but as you can see, the London Open forms the low of the day within this time bracket. Moving on, you'll see in the next trading session, which starts from 7 a.m. to 10 a.m. Make sure we get this right. There is a injection of volume into the market. Look how large these candles start to get during this session, this time period. This is what we call the New York Open. And we'll make that blue. As you can see here, there is some type of activity occurring within this time period from 7 a.m. to 10 a.m. The market is injected with volume and it speeds up. Moving on, we'll have the London close session from 10 a.m. to 12 p.m. and we'll make it orange. This is where the high of the day is printed. You can see it's actually right exactly, no, it's after. So it's a little after 12 p.m. Price creates normally the high of the day when bullish during the London close session, which is from 10 a.m. to 12 p.m. Now there are other sessions, but we'll get into that in other videos later into mentorship. But for right now, as a new trader, focus on that open, low, high, and close each day. And also include these sessions to see, are the lows forming in the London Open when bullish, or the highs forming in the London Open when bearish? And then look for an injection of volume occurring during the New York Open, and look for price to slow down during the London close. These are simple things new traders should be studying each and every day to start comprehending the algorithmic code of the Forex market. When you go on the lower time frame, you're going to notice that there's much more data presented to you versus the daily time frame. The candles are made up of larger chunks, and as you go on the lower time frame, the candles or the chart are made up of smaller chunks. But within these lower time frames, you're going to see moments of speed occurring. You can see here there's a large amount of speed occurring here. You can see this is the largest candle for the entire daily session. There's no candle within this time period from the start of June 10th all the way up into June 12th, which is Sunday. So this is Friday. You can see that this is the largest candle. There was clearly an injection of volume and speed here. Price runs up here. That is something that you as a new trader need to focus on, looking for these areas of speed. The area of speed is occurring right here. So we're going to use the replay function to show it. We'll go back here. I'm going to slow it down, and we're going to press play. That was your area of speed here. See your price dynamically shot up here. And when is it occurring? During a session. You need to study that. It is occurring during a session. Price rallies really fast, creating speed. This is your area of speed to simply show you in this video. This candle to this candle here. That is your area of speed. You need to be concerned about that. And if we play it forward, from that area of speed, there was what? An entry or potential exit, depending on how you were trading the market. But that area of speed was an entry point. You get into the market long in this area or this zone, and you hold for whatever your target or destination is. When it comes to old highs, old lows, or relatively equal highs or equal lows, the algorithm is programmed to chase that because there's liquidity resting above and below these highs or lows. The market is most likely going to be drawn to clean lows. What I mean by clean lows is this. See how this market is starting to slow down and the candles are getting smaller and smaller and smaller? You can see that these are all relatively equal lows. These are clean lows. There's orders being built up below here. So there's possibly buyers here. They think the market is going to fly. You know, it's getting smaller, smaller, smaller. They're waiting to buy. So they're accumulating buy orders below this low here. There's also a high here. There's probably sell orders here. People that are waiting for the market to get above this high, they're going to wait to short it as well. You also have this dynamic turnaround. So price was dropping and then all of a sudden it turned around and went higher. So that's a dynamic impulse move to the upside. That's a low point that you can use. You also have another dynamic turnaround point here. And here. So these are all relatively equal lows. Just because they're not exactly the same point or made the same low as it, these are all relatively equal. They're within the same region, relatively equal lows. These are definitely relatively equal lows. Look how close these lows are to each other. Now we're going to watch price play out and either be drawn to the upside or downside because of these highs or lows. You can see price takes this low out, these clean lows. Price reaches down to this dynamic low that was formed here as well. And then price rallies and takes out the high point that it falls from. So as you can see, there is a code to this market. There is a draw on liquidity. The market is being pulled either to the upside or downside during certain moments. Here on the daily time frame, those same ideas and principles occur. Old highs and old lows are going to be targeted or used as magnets for price action. You can see that price reached down to take out this candle's previous daily low. And do notice we are on a daily time frame. You can see that price has not taken out the previous daily high currently. And yes, we are using the replay function. You can see that price created a high here and then created a low here as well. You as a new trader, you're going to study what happens when price takes out these lows and highs and when they do that and how it occurs. Now, we can either study the next daily candle that's going to form. Is it going to reach down to take out this candle's low or this candle's high? Well, let's see. Price takes out that candle's high. You can see it takes out the high here. Is it going to reach for this candle's high? There's a possibility now because now we could look to see that it's taken out highs and not the low. It didn't take out this candle's low. So let's move on to the next day. This low, this high. Let's study to see if price will take out this candle's high and not the low. Press play. You can see it takes out the high and takes out this candle's high as well. So it takes out 2 days ago's high and takes out another high here, an old high, relatively equal highs. These are two clean. The market sweeps that as well. You can see the market is either trending bullishly because it keeps taking out previous daily's high. So let's see what happens to the market now. We'll keep playing it. Takes out the lows and takes out the highs here. And we'll keep playing. Takes out the high. And then price new daily candle that has formed here has taken out the high. So these are things you need to study each and every day. However, I know many people may say, but this one took out the high and the low. That's going to come in further lessons. That's what you call an outside day. But we're not going to talk about that right now. However, as a new trader, understand the highs, the lows, the opens, and the closes each and every day because it will help you understand how this market is breathing and how it's going about its life cycle each and every day, each and every week, and each and every month. Focus in. When it comes to trading Forex, you can trade many currencies, cryptos, metals, and much more. Pick 2 pairs to trade for the next 6 months. You do not want to overwhelm yourself during your learning process. Allow yourself to get familiar with 2 to 3 pairs and their tendencies. You will learn that pairs have their own unique characteristics and price action. Block the noise out. If you're going to trade Forex, keep yourself organized. Remove anything that will interrupt your studies. Show up every day. Over the years, I have studied and posted many of my experiences with the markets. Many lessons, wins, and losses. However, at the end of the day, the hours you put in will determine your outcome greatly. Let's take a stroll through my TradingView post. Click Forex TradingView profile. You can see in the bio, indicators are detrimental to traders' development, and I still stand on that. This also falls in the same category as blocking out the noise. Remove all those indicators. Remove anything that's confusing you from reading raw price action. Those candles on that chart tells you everything that you need. You do not need any indicators. Trust and believe me. When you get rid of your indicators and you start reading raw price action, things will start understanding, things will start clicking, the gears will turn. You'll see I trade Forex 56% of the time, indices 17% of the time, stocks 2%, 25% is others. Not saying I trade it specifically, but that's at least what I post. My top mentioned symbols are DXY, GU, Gold, and UJ. And you'll see here, there's a plethora of examples, lessons, wins, losses as well. And we're just going to scroll and show you how I show up every day. Every day I show up. There's not a day I don't show up. You have to be consistent if you want to learn this market. Not being consistent will just cause you to want to buy signals from other people, which is also detrimental. That's noise as well. You don't need signals within this industry. You yourself should be providing your own signals, entry and exits every single time. Here's an oil trade that I post and published on May 13th. I've been long since here. As you can see, you're profitable. Do not allow other people to tell you you should be doing it this way, you should be doing that way. There is no right and wrong way to go about certain things. Understand Forex is not one-sided. It is multi-dimensional. There are many ways for you to be profitable, whether that is short-term, long-term, or intermediate trading, or position trading. You need to figure out what works for you and your lifestyle and your time schedule and your personality and characteristics. And every day, I just show up. Every single day for myself, because who else is going to do it but me? I need to study this. I can't let the next person do it for me, because then I'm not really a trader, in my opinion. But we could scroll. And it's constant, you know? It's constant. And you can see the growth in my trading skills as you go on. I want to actually get back to, I can't even get to the last page. I doubt it. But you'll see every day, Monday, Tuesday, Wednesday, Thursday, Friday, I break it down. I show, where the markets are most likely going to create the low of the day, the high of the day, or when the markets are going to start slowing down and you should avoid trading. These are many things that traders need to be informed about. But you need to do your own due diligence and go into these markets and look at it. They're going to be restless nights. There are going to be nights where you miss sleep. There are going to be nights where you miss events. You can't hang out with the girls. You can't hang out with the boys. There are going to be times where you're busy with other things and life comes in the way. This is also a U.S. oil trade. Back in December in 2021, I was in long down here, and look at where oil is today. Oh my gosh. Doesn't make any sense, right? Oil's on a super bullish cycle, but that's for those that know. But all in all, this is just me showing you that you need to show up every day. It's all about you at the end of the day. The main concept of this video, you determine your Forex journey success. I cannot make you rich and successful, but I can provide the tools to make you a well-rounded trader. You can lead the horse to the water, but that does not mean the horse is going to drink it. That is the same thing that I'm telling you here. I can lead you guys to the information and the sources to help you be a successful trader, but it's your tendencies, your personality, and your discipline that's going to make you successful and rich. That wraps up today's video. I'm going to leave you guys off with a quote. Understanding comes from exposure, and exposure creates the experience. Michael J. Huddleston. Thank you, and hopefully you learned something new today. Peace.